Today is March 20, 1:20 p.m. We are looking at gold. It is just at about 0%, the ETF GLD. And here we are. I had a rally last week, and we made a video about this last week also, where we took on an unusual options trade and profited from that. So we're going to look at whether or not gold is going to be going up or down or trading sideways, because it looks like today it's sort of undecided because it's still at close to 0% change. It's sort of going, it just can't make up its mind. So we're going to look at where the large institutions are putting their bets, and we're going to look at the unusual options today. So we saw this 10:21 a.m. trade, very unusual. For the May 19, there were 49,400 contracts. You see these, it's a four-legged options contract where they bought the 195, sold the 185 calls, and then they bought the 200 calls and sold the 205 calls. And again, 49,400 of them. And you could see here on the option chain, this is the Mays here. We also have the same position on that we took on, and we saw this. Here it is. You see here the 185s that are being sold here. There's actually 54,000 contracts of them today. Another 55 contracts here at the 195 calls. And then we have here the 200 calls and the 205 calls, all right here. 55,000 contracts. This one's 56, 52, but we definitely know it's 49,400 of them that one institution put on all at once at 10:21 a.m. And so what does this look like? Well, when we analyze this, make sure here we have it here. We click it, turn that on. You could see here 49,400. So this is the trade. Their max loss is their max loss is the 1,000 for per contract, because it's 10 point wide here from the 195 to 185. 1,000 minus the credit they receive, about 2.5. So that's their max loss is about 750 per contract. And so that's why if you were to multiply the 49,400 of them per total contracts, 1,000 of these, this is 1,000 buying power to put on because of the 10 point wide. So it required $49.4 million to put on. And because of their the credit they received to about 250, you can take that into account. So the max loss on their trade is actually about 750 times the 49,400. 37 million is their max loss here, which shows it here. If you look at the blue line here at this over here, you'll see that as I mouse over there, at expiration it's 37 million at max loss. But I doubt they will wait until expiration to take this trade off, so it will follow the purple line depending on the date that they take it off. And so currently we're right here at 183. So if we look here, they are betting that this gold will not break 187, just right here. That's their break-even point. And as long as it's trading below that, they're going to be profitable. Theta will continue to push their trade up if it stays around this range. As time goes on, you'll see here their theta is positive, all right, if it stays at 183. So, but if it starts to increase, their theta will become negative and it will start pushing their profit loss down. But if it goes down, their theta increases, is a positive, so it actually is good for them. So you'll see here, as it goes down, theta is still going to push it up to their profit, which is right there. You'll see here this profit potential of $12 million. It's a $12 million profit if it stays below 184, right? But anywhere below 187, it's going to be profitable for them. So they are betting this 187 range right here, that it won't rally past this 187 point. So keep that in mind in your trading, and you may want to put on some trading strategy, incorporate this into your trading strategy, and that's what they're betting on, that this is not going to cross that. It is going to stay around this range, or it'll drop down from this rally because it's oversold on the RSI. We know a lot of people are talking about it in the media, talking about buying gold. Even if you look at the news, just on Friday, CNBC had this final call report where the analysts and traders are telling everybody to buy gold. And but Wall Street, this large hedge fund, is not betting that gold is going to be so bullish that it's not going to cross 187. I mean, it can increase to 187. That's fine, and they'll still be profitable, but they're going to be profitable as it goes down too, or staying the same. So it's a nice iron condor trade that you may want to consider for your trades. So again, subscribe if you like this video, and watch our video that we did last week. We made 149% profit for doing our gold trade last week, where we followed the unusual options, and we'll link that video at the top right corner at the end of this video. So take a look at that and how we did that, and continue to watch our videos as we bet on gold. Take care.